Hello and welcome back to the Geordie Pig Investor channel, where we dive deep into the world of dividend investing to help you build a portfolio that pays you. Whether you're just starting out or looking to maximize your passive income, this channel is your go-to resource for strategies, insights, and the tools you need to grow your wealth steadily over time. Hit that subscribe button and join me as we explore how to make your money work for you, one dividend at a time. In today's video, I'll be going through all the stocks I bought and sold in the month of May. This is a video that's been requested a few times and I've got great feedback from the recent ones I've put out, so I'm going to continue making these buy and sell videos each month, as I know how you all appreciate how transparent I am on my channel. This was another super action-packed month, as I have lots of buys and even a sale within the portfolio. This includes adding some new stocks and ETFs to the portfolio, so stay tuned for that. I feel my portfolio is aligning better with my personal goals and I'm really happy with the changes I've made. Anyways, let's get straight into it and see what stocks I bought and sold in the month of May. First stock on the list today is going to be the sale, and it is none other than Diageo. I owned 71 shares and sold them for a total of £1,518.78. I did receive £60.81 in dividend payments and had to pay a total of £9.56 in fees, meaning our overall realised loss was negative £349.12. I sold my full Diageo position because although it remains a globally recognised leader in the spirits industry with an impressive portfolio of brands, I chose to sell my position due to a combination of weakening fundamentals, slowing revenue growth in key markets, and concern about management's capital allocation strategy. The company's premium valuation no longer aligned with its performance trajectory, and I saw better risk to reward opportunities elsewhere. Selling isn't a bet against Diageo's future, it's a strategic decision to reallocate capital towards assets with stronger momentum, better growth prospects, or more favourable valuations in today's macro environment. I have a full video coming out soon highlighting in more detail why I think Diageo is a sinking ship, so if that's something you're interested in, then please turn on the bell notification so you won't miss out on it. That was my only sale of the month, and now we can move on to the exciting part where I show you all the stocks I bought in May. The first stock I bought in May was none other than Royal Dutch Shell. I bought 18 shares for a total amount of £440.78. So my new position size within this company is £1,705.10, and I now own a total of 68 shares. The next stock I added in the month of May was none other than Greggs. I added 6 shares for a total of £114.71, bringing my new position size to £613.49. I only opened a position up in Greggs a couple of months ago, so I now have a total of 31 shares, and I'm going to hopefully continue to add to this position in the coming months. The third stock I bought in the month of May was Chevron, where I purchased 6 shares throughout the entire month for a total amount of £609.63, meaning my new position size is £1,344.82, and I now have a total of 13 shares. Another American company we bought in the month of May was PepsiCo, where I added to my current position by adding on 2 more shares for a total amount of £197.56. This means we now own 16 total shares for an amount of £1,536.77. I'm very much looking forward to getting my next dividend payments from these 2 companies, as it's going to be a lot bigger than the last one I would have received. The next stock on the list was MasterCard, where I bought 0.2 shares for a total amount of £84.85, meaning we now have a position size over £1,000 at £1,091.07. I have a total of 2.5 shares, and hopefully over the next couple of months again I'll be able to continue adding to this one and bring that new position size closer to 4 shares. We also added 3 shares of Starbucks this month for a total amount of £185.33, meaning we now have a position size of £1,049.25 and have a total of 16 shares. The next stock I bought in the month of May was a UK dividend payer, and that is none other than Greencoat UK Wind. I finally topped up my position, so I now have a total of 2,000 shares by adding 100 shares last month for a total amount of £109.95. The new position size is now £2,332. And we also added the Vanguard S&P 500 ETF, where I added 2.5 shares for a total amount of £205.27. My new position size is now £8,832.99, and we have 105 shares. This is a stock that I buy every single week, no matter if the market is up or down. I aim to buy 0.5 shares a week every single Monday, and then if there is a dip in the share price, I may look to add even more to the ETF. The next one on the list is the JP Morgan Growth and Income ETF, where we added 88 shares for a total amount of £475.77. Our new position size is £6,408, and we have 1,200 shares. This is exactly the same as the last ETF, where I buy it every single Monday morning, regardless of market noise, and I typically look to buy 6 shares of JGGI. This ETF has had some nice dips over the last few months, so I've been able to add a good bit extra capital to the stock, and it's now become my biggest dividend payer in the entire portfolio. It actually now pays over £250 in the 4 quarterly payments. And the next ETF I bought in May was another JP Morgan ETF. It was the Global Equity Premium. I bought 7 shares for a total amount of £142.87, meaning our new position size is £1,169.28, and I own a total of 58 shares. I'm also aiming to add around 1 share of this ETF to the portfolio on a weekly basis. The next stock we're going to look at is the first new stock I added to the portfolio, and it is none other than United Health Group. We added 6 shares for a total amount of £1,332.57, and the new position size is now at £1,341.78. I bought UNH stock because it offers strong fundamentals, consistent earnings growth, and long-term exposure to the healthcare sector. United Health's diversified business model, especially its Optum segment, positions it well for both stability and growth in an uncertain market. With the recent share price decline, it means the dividend yield is the highest it's ever been, and the insider buying gives me confidence in the company. I have done a video in more detail why I bought this stock, so please check that out if you want a more in-depth analysis on United Health Group. The next new stock we added to the portfolio was none other than the global NASDAQ 100 covered call ETF, where we added 60 shares for a total amount of £697.44. Our new position size is now £699.50, and I bought QYLP for its high monthly income potential through covered call strategies, combined with exposure to large cap US equities via the NASDAQ 100. It fits my portfolio as a tactical income play, offering attractive yield with some growth exposure, while being mindful of the trade-offs in capital appreciation due to the call writing strategy. Having said this, since buying the fund, I've been doing further research, and I think I prefer JEQP, as the upside potential is nowhere near as capped as QYLP, and they both have similar exposure to the NASDAQ 100. I am currently slightly up in my position, and moving forward I think a straight swap between these two ETFs will benefit my portfolio long term, so make sure to watch out for that next month. The next new stock I added to the portfolio was the Income Shares Tesla ETP, where I bought 25 shares of the stock for a total amount of £109.58, and the new position size is now £105.50. I added this ETP to capitalize on Tesla's high volatility while earning consistent income through the fund's covered call strategy. It provides a balanced way to stay exposed to a high growth name like Tesla with reduced downside risk and benefit from an extremely high yield. The next stock is another income play, and it is the Coinbase ETP, where we bought 50 shares for a total amount of £192.55. My new position size is now £182.40, and I bought the Income Shares Coinbase Options ETP to gain targeted crypto exposure with enhanced yield potential through an options overlay. It offers a unique way to participate in Coinbase's volatility while generating consistent income, making it a strategic addition to my alternative and income focused allocation. My strategy is to hold no more than 10% of my entire portfolio in these high yield dividend ETFs with the goal in mind to reinvest the dividends into safer assets such as VUSA and JGGI. This way I have some exposure to these types of stocks, but still an amount I'm very comfortable with, and I believe this will help further motivate me to continue investing and help speed up the snowballing process. This is why I picked the two of the more volatile ETPs, as I don't mind having increased risk, especially with the potential increased reward that comes with it. If you want to hear more about income shares, I have also done a recent video on this, so I'll leave the link to it in the description down below and you can check it out. So as you have just saw, I have had a very busy month in May and actually ended up buying nearly £5,000 worth of stocks and selling just over £1,500 worth. Most of this money was cash I deployed into the portfolio myself alongside the Diageo sale, but there was some money that came from reinvested dividends I received during the month. If you want to see which stocks actually paid me a dividend in May, then please check out that video as it's already on my channel. Hopefully moving forward I can continue this trend of mainly buying with minimal sells, as I really want to focus on solidifying my current stocks and ETFs. Moving forward, let's have a look at all of my main objectives for 2025. In this part of the video, I'm going to break down some key points for my investing strategy moving forward, and although you'll probably agree that it is very simple for the most part, I really do think it helps to write it down and remind yourself of what your goals are moving forward. Remember, your goals can change, so always ask yourself if you are still happy with the initial ones you set out. First up is that I want to be consistently adding money every payday so that I always pay myself first into my ISA. This is so important for me as it means I get used to not seeing or having this money come payday. Just like I have to pay my mortgage or water bill every month, I think of this payment going into my investment account as another necessary bill. This then makes it a non-negotiable every month and helps turn investing into a healthy habit. Next up is having consistent weekly contributions towards my two main ETFs, VUSA and JGGI. Over time, I want to work them up to being around 40% of my overall portfolio. Right now, they sit at just under 35% of my overall portfolio, which I'm actually really happy with. I have this as my main goal for 2025, as it's important for me to ignore market noise, and every Monday, regardless of what's happening in the world, I know that I will add around £100 between VUSA and JGGI. I also have a separate goal where I want to add one share of JEPG each week. This will also be a non-negotiable in 2025. Specifically, I want to keep adding one share of JEPG till I'm receiving enough dividends from them each month so that I can buy a full share with the dividend payment I receive on a monthly basis. This last month, I received just over £8.50 and a share currently sits at just under £21, so I'm actually over 40% of the way there. By adding these three ETFs every week, I know that if I don't want to buy anything else that week, I've done my bare minimum purchases and will be slowly building towards my dividend empire. A real big goal of mine over the last 6 months was to trim my portfolio to a maximum of 25 overall stocks and ETFs. After some careful considerations and reevaluations within my portfolio, I can now say that it is under this number, being at 24. This is a big one for me personally, as I feel you can get carried away with adding stocks and ETFs to your portfolio, and it may seem good at the time, but long term I feel it can become a bit of a mess and really hard to keep on top of everything within your portfolio. I feel my portfolio has a clear structure and objective to every stock and ETF I now own, even after purchasing the 4 new ones this month. Next up is to continue to add to my growth and income stocks when I see their price is a good buying opportunity. With having a portfolio size that I feel is manageable means I can keep on top of every position, so if I feel a stock is undervalued and I have capital available, then I know I can bolster that position within my portfolio. I will always try to buy good quality stocks at a discount where possible, as highlighted with the purchases in today's video. And finally, it is to continue striving to have a good balance between growth and income stocks. Due to adding these higher yielding ETFs this last month, my portfolio has increased its dividend yield from 3.4% to over 4.4%. The 5-year dividend growth rate is still at 5.38%, so both are in the ranges I want. Again, just something to consistently track to make sure it stays within my personal portfolio ranges and I can then hold myself accountable. And that wraps up this month's buys and sells. If you found value in this breakdown, be sure to hit the like button and subscribe for more investing insights each month. Drop a comment if you made any interesting moves yourself. I'd love to hear what you've been buying or selling. Thanks for watching. Until next time, keep compounding and stay patient in the market because your future self will thank you. For now, this is the Geordie Pig Investor, over and out.